Well, happy Monday, everybody. It is July 3rd. Hope you all are enjoying your Independence Day week. More importantly, I hope you're off work today, spending some time with friends and family, grilling and chilling. We're going to be working today, but wanted to share with you some of the latest data here in the Austin metro area. This is going to be our July market trends report. And in this video, I'm going to share with you three trends that we're seeing that are signaling that we are heading into a slowdown in the market compared to what we've seen in the spring. Some of that is seasonal, and let me share that with you. I'm going to start right here. This is May 2023 data. So obviously we're looking back a little bit, a little over a month ago, but we finally have all of the May data in. So in terms of number of home sales, you can see the seasonal pattern of real estate, and this includes the pandemic. But traditionally, we start with kind of lower inventory and lower buyer activity in January. It ramps up in the spring. They close in early summer. Here's May, June, and July. But by the time you hit July, you can already see in some of these years, the trends go down. In 2020, it kept going up because the pandemic kind of pushed the sales later into the summer because they shut us down here in the spring. But what you're going to see is we're already in July. So if a buyer has not written a contract yet, they're not closing until August or September or October, depending on where they put that closing date and how y'all negotiate. And you can see there's fewer sales coming. So what's happening is we're already into the season of fewer home sales. July 4th was always traditionally kind of the marker that said, hey, if once you get to July 4th, you're going to feel it slow down. I think that's going to be the case this year again, but not just because of seasonality, but this will show you the seasonal patterns. We obviously had kind of a nice bump in buyer activity in the spring. The median home price did come up some, but we will start to see that taper off and slow down. Sales volume is just the number of sales times the price of those homes. So this also shows you sales volume was up as well. And then median price, here we go. So we started the year at $449.9 for the metro area. We squeaked up a little bit. We're at $467.5 in May. I expect that, and I said this even in January, we were going to go up a little, peak around now, and it may go down a little. If all things hold the same, we might end the year where we started. So this year, I predict, is going to be fairly flat unless we have some big cataclysmic change, either up or down. If interest rates were able to come way down, then I think you'd see the buyer demand spike back into the market, probably help propel that price maybe back up a little bit. But if we have economic factors that either drag out the interest rate higher longer, or there's some sort of economic event like a downturn, then I think you could see the median home price come down a little faster. But for now, I think we're starting to flatten out for this year. Average sales price, same drill. It tends to go a little higher because that also factors in heavier when you have higher priced properties. And then finally, total listings. So this is, we're at the highest point we've had in 5 years other than last fall. And that's when you really had, you can see that light blue line. We were at historically the lowest inventory we'd ever had. And then interest rates rose, and it just shut off the buyers. The homes really built up, including new builds. And then they started to finally sell off at the end of the year. Buyer activity slowed down, but also it started selling through some of that inventory, and some of the sellers just took their properties off the market. Now we're seeing that inventory build again as we head into the late summer. I'm going to take you over here to mortgage rates. So trend number one, why I think a seasonal slowdown, we always see, or why the market's going to slow down, we always see that seasonality. We're already in July. Those are people that aren't closing until August or September, most likely. We're really in the fall buying season right now, Q3. Here's mortgage rates. So right now, mortgage rates, when we were back in very beginning of May, we were still in the mid-6 range. And that was the sales that were closing in, late May and June. So we were seeing buyers at least getting 6.5. That felt okay at the time. Since then, obviously the Federal Reserve is stating and being very hawkish. They want to continue with higher rates. They might even raise rates a couple more times. It doesn't directly impact mortgages, but it impacts the bond market, who's trying to predict the yield that they want for future months and years. So what's happened is interest rates spiked up over 7% in late May. And when they came down, they didn't come down very far. So we've been at 6.8 or higher since late May. So between 7.1 and 6.85 since late May. So for the last 6-7 weeks, buyers have had to go get a 6.8 or higher mortgage rate And right now we're over 7%. That peaked over at the end of last week. Last Thursday, we hit over 7%, and the bond yields continue to be going up. So I'm predicting we're going to see high 6s to 7% probably through July, and could be into August. So what's that doing to buyers? So here is a look at the chart of the last 12 months. This is active versus sold listings. So obviously green are the active listings, and here was last fall. We peaked out around 11,500 single family homes. This is not everything, just single family homes. And then it dropped, as we saw in the previous chart, came down through the winter. Closed sales are your blue markers, okay? So we bottomed out in January with only 1,600 sales in the entire metro area for single family homes. We did have a nice little climb through the spring. When we got to May, which May closings are your March, April buyers, and they had 6.5 interest rates. And so they were closing. We closed 3,300, almost 3,400 home sales in May. Don't look at this last line. That's July. We just kicked that off. But if I look at June, inventory was going up. So now we're almost 10,600 single family homes, getting closer to that 11.5 peak we saw last year. But look what happened in June. And we haven't fully finished June. There might be some agents that haven't filed their closed sales in there yet, but give it a week, this number will kind of round out. But we're less than 2,800 sales, and last month we had 3,400 sales. So we're 500-600 sales lower when we should see that number go up. Why? I think interest rates are starting to play a heavier factor on buyers. Fewer buyers writing offers means the inventory will build up. It just creates more competition with fewer buyers and higher interest rates. So there's your three trends right now. That mix of higher inventory, higher rates, and fewer buyers is just going to mean there's going to have to be more concessions out of the market. This is a look at the last 7 days. So we've had 1,300 price decreases out of those 10,000-ish listings. So you're probably looking at 10 to 15% of the market did a price correction in the last year. We've been staying steady about 800 to 900 new listings every single week. And then that's just barely keeping pace with what we saw in terms of closed sales in the last week. So, and we're at peak sales right now, but yet we already see that it's starting to slow down. So that's giving us an idea where the market is heading. I think as long as interest rates are staying in this high 6 to over 7 range, look, it's just going to put downward pressure on buyers. It just means some buyers are just going to sit on their hands until they see that rate come down. I do think there's some pent up demand, but it's expensive. It's expensive for them to buy the house. They got to want it. If you're a seller right now, I would say focus on, number one, really getting nailed down on your price. Look at your competition and who you are up against right now, because that's who buyers are going to look at. They're not looking at closed sales. They don't care what somebody sold a house for in March. They're looking at what can they buy right now with that expensive money. Are there any projects that you can do to shore up that house and make sure that you're kind of overcoming any big objections that a buyer may have? Because buyers typically aren't going to assume you will do things for them. If they see something that's broken or they see something that's missing with that property, they're going to assume they're not going to get it, and they're going to go buy a house that has it. So anyways, if you are a buyer, just know that this may be a window of opportunity, maybe for the next 2, 3, 4 months, where while there's higher rates, obviously you are going to have less competition. You may have some opportunity to negotiate with some of these sellers, get a property that you like, and then hopefully at some point in the future, when rates come down, you can refinance and you won't be competing with the growing pool of buyers that will start to show up as those rates come down. I also think we're going to see a growing list of sellers come out as well, because who makes up most of the buyers? Sellers. Somebody that already owns a property that's selling it and moving to a new property. And so what's going to happen is we're going to see inventory and buyers grow when interest rates come down. Finally, I want to share with you this last chart. This came out of Redfin's data center, home purchase cancellations. So typically, at least 1 out of every 10 contracts is going to cancel because contracts are written where buyers have contingencies. Hey, I need to get financing. Hey, I want to inspect that property. I want to have the right to change my mind. So what happens is typically we have some percentage of all contracts will come out, will terminate at some point. So this is from the 50 largest areas. Right now, Austin, we're sitting about 13.2% of contracts will terminate. At least that's what happened in May. It was a little lower in April, but that was also last year. We're kind of on par with last year. But it's kind of interesting to go through this list and see what's happening in other markets. If I go down to Dallas, they're at 17%. So they're higher than Austin. If I come down to Fort Worth, they're at 18%. That's higher than Austin. Houston, also 18%. And if I come down to San Antonio, they're at 20%. So Austin's doing okay in terms, they're seeing higher cancellations in those other markets right now. I think some of it is Austin had its biggest drop last year. I think some of these markets are starting to have more of that price pressure now because they didn't immediately shift down the way that Austin did. But it's interesting to see this. If you want to check that video or check this data out, you can always go to the Redfin Data Center. They've got some really cool charts and graphs. Anyways, I hope this was really helpful. If you want to watch all our videos, you can check out our YouTube channel at Ryan Kelly Group, and you will see all of our weekly videos there. And of course, if you want to deep dive on your property or you're getting ready to purchase a property right now, and you want to work through all this data to decide the best decision for you, please reach out. We'd love the opportunity to talk with you. Until then, go launch some fireworks, eat some hot dogs, enjoy July 4th, and talk to you soon.